Hi, this is Mike Maloney, and I've got Jeff Clark with me once again for a little bit of discussion on what's happening with the precious metals and the economy. Jeff, how are you doing?
I'm doing great, Mike. It's great to be back with you. We got a lot of fun stuff and interesting stuff to talk about today. But we want to start this video, I understand, with you saying a big thank you to all the people who wished you happy birthday.
Yeah, unbeknownst to me, Dan put out, I believe, a tweet telling people that it was my birthday and asking them to make a short, very short birthday wish for me, a birthday video. And it was just amazing. I went to an Italian restaurant that I've found these amazing flavors at that I really like. And I had eaten there the night before even, and then I ate there last night as well. So Friday, Saturday, and Monday, I ate at the same restaurant. But we went there with several people, and then we came back to my condominium here later, and Dan had two more presents for me. A jar of the original Chi-Chi chili, which is this awesome sauce that a friend of ours makes. Chi-Chi is her name, and it's her grandmother's recipe, and it's available on Amazon. And then also, he had lined up just all these different tabs of one video after another, there were more than 30 of them. It took close to an hour to watch them all. And they were all between 30 seconds and 2 or 3 minutes. And it was just amazing. I was blown away. I want to say my heartfelt thanks to everybody that I couldn't believe how international it was and how it cuts across all age groups. There was one kid on there that was very, very young. I have no idea how young, but I mean, I don't know, 4, 5, something like that, 6, and saying thank you. I was just absolutely touched and amazed. It was great.
Yeah, well, from myself and the whole Gold Silver staff and all your viewership, Mike, happy birthday. We're so thankful for that we have
65 you. Now. I'm on my 65th trip around the sun.
Yeah, there you go.
Yeah.
Very good. Okay, well, let's jump into some content here, Mike, and get your reaction to some things. And the article I wrote last week that I told you I was going to write, the open letter to Elon Musk, encouraging him to buy physical gold and not ETFs. And for those of you who haven't read that article, there's a lot of good information in there, not because I wrote it, but it really is a deep dive into why you want to buy physical and avoid paper products if at all possible. We've talked a lot about that, Mike, but the one thing I want to call your attention to is silver. At the end of the article, I outline how much silver Tesla is going to need if they reach their goal of 2030 of producing 20 million EVs that year. They would need 31.45 million ounces of silver per year, and that's just Tesla's EV, production. That doesn't count all the other EV car companies. That doesn't count his energy business, his aeronautic business. And I had a little fun in that article, and I outlined just how much he would have to spend to, procure all this product. If he bought it now at $25 silver, it would be $786 million. But if he waits till 2030 and silver is, say, $100, and of course it could easily be higher than that, it would be
which I think it will be.
Yeah, right. But if it's $100 silver, now he's going to have to spend $3.1 billion to procure that product just for Tesla, him meeting his goals. And this is industry-wide. Mike, the EV production and solar are going to be the two biggest industrial uses of silver by far. It's going nowhere but up, the demand for this. And of course, the price is eventually going to go up as well. So, Mike, what's your reaction to all that? And what's your reaction to silver kind of stuck in this trading range right now?
Well, the stuck in the trading range just shows that the strategy of buying the ETFs is a bad strategy. It's supposed to take silver off of the exchanges, and it did. But one of the things that you can do with an ETF is you can short it. And when you short it, the broker is basically creating a share or borrowing a share from somebody else that is owed back. There isn't, in other words, if you go long and buy silver on an ETF, and then somebody else shorts it, your ounces of silver may be borrowed. There's the title to the ounces, the shares, borrowed and loaned to somebody that then sells them to somebody else that is going long in the market. So his purchase has been neutralized. His purchase does not drive up the price because now two people basically have title to the same ounce. The short seller must buy it back sometime or another and return it. And that's one of the things that causes a short squeeze. But what's been really interesting, there's two of the ETFs that have come out and changed their prospectus, changed the rules that they play by have been amended, and they're warning people that this rush into silver can cause, and it said in the original prospectus, and I wrote this in my book, I'm not quoting it exactly, I don't think, but it'll be pretty close, that they caution people that due to certain market illiquidity conditions, the price of the iShares and the price of silver may fall, may diverge, and the iShares may fall. So in other words, silver can go to the moon, SLV can go to the ground. That's just one thing. But one of the things that your article didn't talk about is they just announced at Tesla that they are going to up their supercharger networks so that they can create 10,000 supercharger stalls per year. They've already got 20,000 stalls. It's the largest chain of electric charge stations on Earth. They cover all of Europe, all of North America, some of the Middle East, some of China, most of Japan, a lot of Australia. So they're very, very global. And they've just created a line for manufacturing the superchargers in China. And they all have the new battery that they've come out with. So all of these superchargers are going to contain silver. They also make battery packs so that we don't have to continuously build power plants, because the regular grid, the electric grid, has to be able to meet peak demand. So plants, they actually turn on plants and turn off plants with the usage cycle during the day. We have to have all this extra capacity. You put in battery packs and you don't have to build a new plant because you're charging them up during the low consumption hours and then releasing all of that energy in the high consumption hours. And so they're making these massive battery storage facilities, and all of this will require silver, along with Tesla being one of the world's largest solar panel manufacturers, solar panels and their new solar roof. And so with this, yes, they should be buying silver now. Elon Musk had talked about putting a certain percentage of their assets into gold. But what would be far more important for Tesla is to remove silver from the market at low prices now. And, when you say $100, name something that only goes to double its 1980 high. Can you name anything on the planet right now, with the exception of like computer chips, something that's technology driven, where we've developed that technology during this time frame? Can you name like a commodity or any other thing that's selling at a discount to its 1980 price? You can't. And this manipulation that they have done, which is an extraordinary feat of controlling the price, there's been this huge demand and rush into silver, and yet the price was smashed down. It really exposes this pretty much criminal manipulation, but they are losing control over it very slowly, or silver would still be $4 and something per ounce, and gold would be $250 per ounce. But the fact that silver was $50 in 1980, it's only $27 today, is like insane. And so $100 price, I think, is just incredibly underestimating where silver should go. If you talk about 300 or 500, those are sort of realistic estimates, I think, in a blow-off top peak, and it may be far beyond that. It all depends on where gold goes to, and that depends on whether or not we have some sort of crisis.
Right, which we think is pretty much inevitable here at some
Yeah.
point. So,
Brilliant article, by the way, Jeff. And if everybody hasn't read that article already, please go and read Jeff's article. It really points out why you should be staying away from these funds, and the very fact that they changed the rules. And one of them basically says that this squeeze can disrupt things and cause the availability. So they've developed a product where they're afraid to sell too much of it. If you
right.
buy it, it might not work.
Right. Very good. Yes. For those that don't know, we'll talk about it later, but SLV did change their prospectus here just recently, and they acknowledge right up front that the price of their fund may not match the spot price of silver. They changed the rules basically because of what happened in the market. So that's just one of many reasons you want to be careful and probably avoid, a paper representation of.
Well, it doesn't match the spot price. I generated a chart and sent it to you of the iShares SLV divided by the price of silver. And what it shows is that since its inception, SLV shares have lost almost 8% of their value against silver. And so what that means is that you are far better off if you're I wrote in my book, if you're a day trader, buy SLV and GLD. You're going to probably be all right. If you're a long-term investor, if you're looking for protection and everything else, the ETFs, they're a derivative, and you're exposing yourself to a whole bunch of other risks, plus these hidden management fees that they take by reducing the value of your shares.
Yes, exactly. Well, Mike, on to tweet of the day, and this is from my mentor at Casey Research, Louis James, who I really like and still have a great relationship with. He put out this tweet the other day that says, "Whoa, forget winter, inflation is coming, very bullish for all commodities." And this chart is basically the money supply for both the U.S. and China. In this chart, you'll see the money supply for the U.S. is in white, but look at the money supply for China in red. It has exploded much bigger than the U.S. has. Mike, this currency printing thing, right, is a global phenomenon. And I don't know how we avoid inflation. At some point,
yes,
it's really going to matter, right? So, Mike, anyway, what's your reaction to Louis' chart there?
Well, I'll try and keep it short, but when I was writing my book, I came up with my own measurement of inflation, and it's based on the fact that every unit of currency created has to go somewhere. And one of the problems that we have with the way the government measures inflation is they're not measuring everything. You have to measure the stock market because it inflates the stock market, or it inflates savings. If velocity is slowing down, it means that people are saving the currency that's being created. So that sector gets inflated, or groceries, or this or that, and it sloshes back and forth between these different sectors. And so we have inflated savings and we've inflated the stock market, and we haven't seen a lot of retail inflation. But it is coming. And the reason that China's growth in their currency supply so far outstrips the U.S. Growth is because that's part of manipulating exchange rates. If they want to hold down the value of the renminbi as their economy grows so that they can sell more exports than they have imports and have this trade imbalance, which, by the way, allows, if they buy U.S. treasuries to neutralize which they used to do. If they buy U.S. treasuries to neutralize the inflation that would be caused by the exchange rate changes that would be caused by this trade imbalance, when they do that, it allows the U.S. to run these big, huge budget deficits. Now, they've stopped the buying, but they're doing this printing. So they're doing it at the expense of their own population, the raging inflation that's happening in China. Where this all ends is a total disaster for pretty much anything and anybody that isn't connected with precious metals and perhaps cryptocurrencies, in my opinion.
Right, right. It could be quite traumatic at some point.
Yeah, everything does have to come back as inflation sometime. You can't create all of these units of currency without seeing inflation in retail prices eventually. It's just that right now, it's like charged up other we were talking about batteries a little while ago. You charge up a battery, you can release the energy later. That's what happens when you inflate savings accounts and you inflate the stock markets. Those assets can then be sold and purchase real goods later on. So I would look for hard assets to start inflating later on. Right now, if you compare the growth of hard assets to the growth of all the paper assets, then the hard assets are actually deflating at the moment compared to the growth of the currency supply. And so they are a bargain. And that will reverse. This always does throughout history. There isn't any exception. You can't create a whole bunch of currency without consequences. And they're not looking at all of the potential consequences.
Understatement of the year, exactly. Well, on to chart of the day, and this is from Garrett Gogan. He says PSLV is spiking higher, SLV is lagging. Silver stocks are up across the board. The COMEX price is becoming irrelevant. Physical silver demand is driving prices now. And in his chart, you'll see he has the price of SLV here in green and the price of PSLV in white. PSLV is the Sprott Physical Silver Trust. And you can see there has been a price separation. Now, I will point out, Mike, that PSLV is a closed-end fund, and so sentiment can impact the price of that fund. And that's what we're seeing right now. It's rising more than the price of SLV is. So, but Mike, what's your reaction?
Well, one of the things that you have to, when you said it's a closed-end fund, a lot of people don't know what that means. And what it means is instead of like SLV, where you can buy an unlimited number of shares and then they go out and find the silver to match those shares afterwards, which they were unable to do on one of those days with big volume. They were unable to find the equivalent. So there was a period of time where SLV did not have the silver to match the shares. But so SLV, open-end fund, sells as many shares as the public demands, and then they go and find the silver to back up the shares. PSLV, the Sprott fund, is a closed-end fund where they have a certain amount of silver, and the shares trade at either a premium or discount to net asset value. And what was amazing today, I was on their site, and it was still selling at a very slight discount to net asset value. And so then when it goes too high, they can go out and buy more shares and more ounces and add that up, and the price comes down, but you've got more ounces backing up each share. So anyway, I trust the Sprott fund a lot more than I trust SLV and GLD. However, it's still better. I don't know. Can you short the Sprott funds? I'm not sure. But if somebody has to buy an exchange-traded fund, those are the ones that I would recommend. And other than that, it's better to buy physical. And when you look at the degradation that you have over time in the price of SLV, taking silver off the market, the best way to do it is to buy physical in a storage account. That's your own storage account where it's not being held in the same vaults that the Commodities Exchange and SLV and all of these other big funds can do some accounting hanky-panky with.
Right, exactly. Bottom line, it's still better to hold the metal in your hand, in your possession, under your control, some way like that, than a paper representation of the real thing. So, well, on to viewer comments here, Mike. This is from Magix FX, if I'm saying it right. He says, aren't dealers ordering many thousands of ounces and still selling to retail? Where's the shortage, Mike?
Well, one of the things, if you look on our site, there's not very many silver products because we just won't I don't know how to put it, but we're not going to rape our customers. We can get almost anything at some extraordinary spread where it's selling way, way over spot. And we just won't do that. And so we have a more limited selection than the other dealers right now. There is a shortage, and what that has done is caused the spreads to go astronomical. Supply and demand will always be in equilibrium based on price. And right now, it's very tough for all of the dealers to source the precious metals, but you can at some price or another. And you're seeing the price of physical diverge from the price of the paper price on the commodities exchange, which controls the price of all these ETFs and stuff. So physical right now is hard to come by. The shortage is there. You just don't see it. But if you look at our site, you're going to see that there's certain products that you can't buy right now simply because we're not going to rip you off by charging you these extraordinary spreads over spot.
Yes, good point. And supply will come back. We will be able to add more products back to the site. Premiums will hopefully soften here. And that'll be your cue. When supply is back and premiums are a little lower, you want to jump on it because this is going to happen again, and it's probably going to happen worse next time.
We're carrying the products that have the lowest spread, and somebody could always buy those for now and get exposure to silver, like buy 100-ounce bars, get exposure to silver, and then trade those later for Eagles if that's what you want, or something else that's currently selling at some astronomical spread, and you will do much better.
Right, good point. 100-ounce silver bars are available on our site right now as you and I talk. And that is actually our second most popular product. So those are still available if you want to order those right now. So, well, Mike, as we wrap this video up, I'll let you read the quote of the day. But everyone remember, if you have not read Mike's book yet, please download it. He's giving it away for free. You can read it for free. And it's still just as pertinent today as it was when it was written yet, because the crisis that this book talks about that's being set up hasn't happened yet. And so that's why the book is still relevant. So download it for free. The link's below the video here. So Mike, we'll close out this video with the meme of the day.
Okay, the quote, the meme of the day, the quote of the day. I want to make a comment on it first. I was reading an article on Foundation for Economic Education, which is a phenomenal site. Everybody should go there and read some of their articles. And this one article talked about how ineffective Congress is, and that there were 8,820 bills introduced last year, and only 105 of them passed. And I put that in a percentage calculator, and they're able to pass about 1.2% of the bills and laws that are introduced. And actually, I think this is great because you don't want them changing the rules all the time. This is the one thing that's been happening that's been very bad. It's like when you're trying to build a business or work or anything else where you're trying to create wealth and take care of your families and so on. When the rules are constantly changing, it's like trying to build a house on shifting sand. But anyway, this is an old quote from Ronald Reagan. To say that Congress is spending like drunken sailors is an insult to drunken sailors. And I want to thank everybody for watching. And please like the video, give it that thumbs up, subscribe to the channel. And thank you, Jeff. We'll see you next time.
Thank you, Mike. We'll see you next time.